Mic check one, mic check two. If you are watching this live stream back on the replay, take advantage of the chapters and skip ahead to the start of the show. I'm still setting up and giving people time to tune in. Guys, it is hot. It is hot. Oh, it is hot. It is hot. Had a great weekend. Y'all get to see me clean my glasses because they filthy. They filthy. Man, glasses is some of the hardest things to keep clean. It's like every time you touch them, you can't help but grab the lens. Hope y'all had an awesome weekend. And it's time for us to review what took place in the market last week, or the weekend and a Friday, and get ready to prepare to look ahead for what's coming up this week. So the good news is we almost have, or I almost have, the format for the weekly recap lives mapped out. Okay, so that's great. Got an idea about how we're going to do that. That's getting better. The format throughout the week, that's done. We just got to work on getting on the live stream at 10:55, so we're not spending too much time still setting up. So let me put this on the screen. Ticker poll. Take the light down. Do the Q&A because that's what we're doing. What else can I put on the screen? I'm gonna put the charts on the screen for a second, guys. Market close. I'm gonna pull up the watch list. Market watch. Or we can do the heat map. Let's see. S&P 500. Then collapse this. Yeah, I'll pull this on the screen for right now. Give me a second. Thank you guys for tuning in. Hit that like button and consider subscribing to the channel. We're still getting set up for the show. And there's a link in the description for a video that I did about SpaceX prior to it doing what I had an idea we're feeling it was going to do. But it's really informative about IPOs and who really profits off of those and all the different hands and moving parts involved, and how we can do our research to find out what's going on with the company instead of leaving it up to them to do that. Them as in who's really making the money. You got to watch the video to see how that breaks down because there's a lot of different stuff in there, but it's valuable. It's very valuable. Okay. My news. Give me another second. Let's go back here. Let's go back here. There we go. There we go. There we go. Put that back there. We got the ticker poll there. All right. So let me get this script loaded up and this social stream ninja popping. Let's get that going. Okay, that's not working. So reset that. There we go. That's good. That's good. So that's set up. Now we need to go to Social Stream Ninja. There. Get this going. Yeah, what sucks is some of this stuff I can't set up until the live stream actually starts. So I appreciate your patience. I appreciate your patience. My tea all cold now. I had to shave. Oh, we had a lot of stuff going on. All right, so that's working. Delete message. We're just gonna leave that alone. We need to check the audio. Switch this over. Switch the audio over to duo chat. No. LG. And turn that down. There we go. That's louder. Okay, now let's go to the script. Weekly recap live. Here we go. We did the intro part. There's the notable news. Agenda. These are companies. All right, we got that. Delete this. Bam. We're gonna freestyle that and just pull it up on the charts. Notable news. Money. Markets, institutions. Okay. Working on the script, guys. Working on the script. Want to make sure we follow a tight format. Got it. We do have all of the live streams scheduled for the week already posted on the channel. So you can go check those out for the ones you're interested in and click the notify me button on those. All right. So we got to, we need to close in. So oh, it's so hot. Recap live, go to the last one. Okay. Got it. Paste. Oh no. Let's do this. That's fine. That's fine. We're looking for the outro and delete this. Delete this one. All right. Confuse me. Now we go to that one. Okay, now what was the close? I'm gonna try my best to never ever have to go through this part again. At bare minimum, this should be done already. All right, just Sunday, July 15th. All right, so that'd be 19. Okay. I got it, guys. We can go ahead and get started. I don't think it's going to be a long show tonight either. So we're going to keep it short and sweet. Get right to the point because I got a few videos I need to do. Got some things I need to share with you guys that's going to take some editing. Not going to be able to do it on a live stream. So let's get this going. We already got that. Cursor. We have the script. Might check one. Go there. Q&A. Got that. Nobody. Okay. All right, guys, let's go. Welcome to Weekly Recap Live. I'm your host, Joseph Martin, and thank God, thank God, it is Sunday. On tonight's agenda, guys, we're going to follow the money, looking at 4 time frames on our sector performance tracker. Market motivation, looking at notable news driving fear and greed. The fear index, CBOE, market volatility, ticker VIX. And Think or Swim 101. And tonight we're going to be looking at creating alerts. Okay. But before we do that, let's do our roll call and check our stream poll. We are streaming live on YouTube, Facebook, and X. Let's get this chat going and tell us where you're tuning in from. Put a YT in the chat if you're tuning in from YouTube, FB for Facebook, and an X for X. While you guys are filling up the stream and the chat, here's the mission statement. We are building a community over here for people who want to take control of their financial situation by learning how to unlock the wealth building power of the stock market. And we are streaming Monday through Friday following trading sessions at 11 p.m. Eastern time. The U.S. stock market regular trading hours are 9:30 a.m. to 4 p.m. Eastern time. And there's a link for the New York Stock Exchange calendar down in the description. Okay, let's get to it. We're going to start off with our, look at that, I'm gonna knock my glasses off my face. Here we go. We're going to start with our sector performance tracker. So I talked to you guys about this during the week about changing the name of this tool. Okay, I'm going to do a video going into deeper detail on how it works, how it's set up, and things like that, so you can get the most out of this tool when I show it to you. And we use it during the market recap lives and the weekly recap lives. So performance. Got it. All right, so let's go to the charts. Take the ticker poll down. Go here. All right, so here's the charts. We're going to pull up sector performance. So here is the tool. Now, here's what's going on. So this is going to take a little time today because I want to make sure that I do this right. So on the left-hand side of the screen, I was able to put this watch list. So in the watch list, you notice how the percentage change has two numbers beyond the decimal point. So what happens is when it rounds the number on the labels up here, it could look like the price change was exactly the same to another sector. For instance, right here where it says staples, 1.1 could actually be a lower number, but it was rounded up, and that could match with another one. We don't want it to be like that. We want it to be as exact as possible. So there's a way to do that by rewriting the script. So let me see if I already have that one in here. So I'm gonna go to edit studies, go to settings. Yeah, so I already have it. So in this one, I already worked on changing I edited the properties. No, I edit the sources. It has a different name. So edit sources is the actual formula behind the study. So I already edited I already edited the sources. So when we change this to round set 2, you'll see two numbers beyond the decimal space when I click apply. So now all of them have a more specific number. So now we don't see consumer staples as 1.1, it's 1.11. So this is going to help us out a lot more when it comes to these looking like they're the same when they're actually not. So we fixed that, and we are going to look at the week. We're going to look at the week. So let's change this to 5 days. So this is the one we need to see. Now, I'm not sure if this one has this in the properties, but let's check to see. Yes, so we can change it. There's the round set. So now we got the specific numbers for the week. All right, cool. Now let me pull up the other tool we use to look at this. All right. I had a long week too, guys. So if I'm not my usual, like all up to beat self, I got a million things going through my head right now that I got to take care of after we knock out this show. So I'm doing my best to be present and get everything we need to get taken care of while my mind is all over the place. I'm doing my best to try to focus. So that's what's going on. All right, so now that we have this was last week, guys. So we're going to update all of these numbers. So put no here and put no here. So first, let's go ahead and go across everything, and then we'll start updating the data. If I highlight everything, we can go ahead and remove. Just push delete, and then push delete for this, and then we can start from scratch. Yep. And then we can start entering these numbers. All right, so on the week, Monday through Friday, the S&P 500 was up 1.23%. Energy is up 3.49%. Materials is down 2.15%. Industrials is down 1.08%. Consumer discretionary is up 0.1%. 0.1%. Consumer staples is down 1.02%. Healthcare is down 1.77%. Financials is up 0.16%. Information technology is up 2.87%. Communication services is up 1.86%. Utilities is down it's down 0.76%, and real estate is down 0.51%. So we're about to start putting in this data. So the first one, we need to put in SPX 1 week. So the 1 week change on the SPX was 1.23%. Now, notice over here is rounded. So what we're going to do, we're going to highlight all of this. But I want it rounded over here. Yeah, I want it rounded over here. I just didn't want it rounded over here because this will help us know which one it is in order. We don't need it to be that specific over here. But just if you wanted to see how we would change it, we would highlight those rows, blow this up, and then right over here, go up to the top where we can see it. That would add the extra space to it so we can see it all. This would take one away. This one would add one to it. So I'll leave it like that so we can see it, make it easier to show that we actually put all the numbers in. So who was the biggest gainer on the week? I believe it was energy. Yeah, it was energy. So our biggest gainer is going to be energy. That's XLE. And now they were up 3.49%. So we got them. Gainer number 2, I believe it was information technology. Yep. So they were 2.87%. That's the wrong spot for it. Information technology is XLK. And then the percentage change is 2.87%. Third, communication services, I believe. So I'm glancing over it. Yeah, it's communication services. So communication services is XLC, correct? And then the percentage change was 1.86. Bam. Now let me make sure I put this up. Yeah. All right. So we have that. Let's put the highlight on there. Now we're looking for the biggest losers so we can get that data entered for the week. So the biggest loser so far, I'm seeing materials. Yeah, guys, materials. So what is materials? I think materials is XLB. XLB. Yeah, okay. Materials is XLB. They were down 2.15%. Who is the next one? So you got industrials, healthcare. I think it's healthcare, guys. So healthcare is XLV, and they were down 1.77%. And now that I'm seeing how long this takes, so moving in the future, I'm gonna have this data entered already before we do the live stream, so it won't slow it down. Like I said, I'm still working out the format on the weekly recap lives. So as I'm seeing this taking this much time, I don't want this to take this much time during the live stream. So in the future, I'll do this ahead of time. Let's see, what's next? Loser number 3, XLV. So that was number 2. So we have industrials. Yeah, guys, it's industrials. So industrials, I believe, is XLI. Yeah, so it's minus 1.08%. Okay, so that's our biggest gainers, our 3 biggest gainers, our 3 biggest losers on the week that just passed. And overall, the S&P 500 index finished the week up 1.23%. Bam. All right, now let's move on to the month time frame. So we just go over to the next part of the grid, and then we can see up here to the upper left. Let me put this back on the screen. The upper left corner right here, we can see that it says 1M. So 1M focuses on a month worth of time. So on the month, now the month starts from the most recent week and goes back, but it's using days. So like I said, I'm gonna do a video where it breaks this down so you can see what specific time frame we're looking at. And I'll work on that so we can have that video so we can go into deeper depth about it. So the S&P 500 is up 2.6% on the most recent month time frame. That's going to be 21 trading days. Just to give you an idea of what that is. That's 21 trading days. That's how I have it programmed. So we're going to put that in now. SPX, and they're up 2.6%. Got it. Now, biggest gainer, we'll worry about that in the end. Let's just read them across. So for the month, energy is down 4%. Materials is up 0.2%. Industrials is up 3.6%. Consumer discretionary is up 1.2%. Consumer staples is flat. Wow. Okay. You know what, guys? You know why it's showing flat? Because this study does not have the extra 2 decimal point, the extra 2 spaces. You see how it's just stopping at 1? You got 0.6 instead of like 0.6. What should it be? Let me look. It should be, go back. It should be 0.56, not point. It should be 2.56, not 2.6. It's rounding it. That's why you're just seeing 2.6. We want to actually see 2.56. So I'm about to go inside that study and show you what I'm talking about. So we're going to minimize this. And when we go to settings right here in the properties, we don't have that option to change the decimal spaces like we did with the other one. So I would have to actually go inside the sources and work on this code to be able to add it to it. So this is going to take a minute, but I want to make sure that I do this. So just give me a second and I'm going to take this off the screen. I'll show you some of it as I work on it. But right here, so that's good. You see this up here? That's the time frames we looking at. So you got a month is 21 days, 3 months is 61 days, 6 months is 126 days, 9 months is 189, and then 1 year is 252 days. So that's how you know what, and it's the most recent of those days moving backwards as it's looking back in time. So that's that part. All right. So let me put me back on the screen while I work on this code, but that's what I'm doing. Let me change this to Q&A and then put this here while I'm working on this. All right. So the first thing I need to do is add an input. We do not have that input. So show time frame. So go back, cancel. Study. Look here. So it comes right behind show time frame. Round set. Okay, cancel. Go here. Go here. Go here. Edit sources. Show time frame. I'm gonna show you this part. The other part I'm not gonna show you, but I'll show you this. So this part of the code, what I'm doing, guys, I'm adding a button. We don't even have an option to be able to select 1 decimal or 2 decimal spaces. We don't even have that there. So that's what we're about to add right now. So it would be apply. Okay. Now when we go here to the setting, we should see that option now. You see where we can change it. I just changed it. I clicked OK. I clicked apply. You see nothing happen because there's other things I need to do. But the first step was to actually put the control there to be able to change it without having to go into the code. All right. So let me take this down and move some stuff around. I might show you. I just don't want to get a whole code away right now. So let me see, go to settings, go in here, edit sources. All right. Define, that's what I want, that one right there. DF, and then it's gonna be okay. So I put the next part of the code in where it knows, depending on what I pick, the output should be something specific. So I did that part. Now I need to enter that into the actual label that we see at the top of the screen. So I'm about to do that now. And I'll show you that part so you can see it, that part of the code. Let's put that back. All right, here you go. So down here at the bottom in the labels, it's only one decimal space. I need this to be a number 2. If I make that a 2, click apply and click OK, and then click apply. You see that it changed the first one, but all the other ones are the same. But I would have to change that every time I wanted to change it unless I had it programmed with the button. So now when I put it back to 1 and click apply, it should have changed it, but it didn't change it because we manually changed the number. We manually changed the number. So when we go back to the setting, let me take this off because it might start back from the top of the code. Go back into the settings, edit sources. Now when we go all the way down to the bottom, this is why it didn't change. Pull it back up because we manually changed the number 2. I don't want to have to come into the sources and manually change that number. So I put a define in. I think it's called DEF. It's short for DEF. So define what I wanted to do. So round num. So now when I click apply, OK, and apply and OK, it's going to be able to change by that button. So let's go back and change it to 2 decimal spaces. Click OK, then apply. You see it changed. But that was the only one that changed because I didn't replace it in the other ones. So let me go ahead and replace it in the other ones and bear with me. And it'll be faster after we do this. So let's go ahead and go here, edit sources, go down to the bottom and replace the number 1 with that. Bam. Go here. See if we can do that. See if we can do a copy paste. Oh no, that didn't work at all. I gotta manually type it in. That didn't work. Okay, let me go here. Okay, I think we got like 3 more and then it should be good. Yep. All right, now let's see if it changes all of them. So I clicked apply, clicked OK. Yeah, it looks like it changed all of them. Okay, so now every one of them has the 2 decimal places now, so we can get more precise data. All right, so let's look at the gainers. I don't even remember, we didn't go all the way across them because the decimal places wasn't right, but we have it now. So the SPY on the month, the most recent 21 days, the SPY on the month, give me 1 second, guys. Croft, what's up? Nothing much in the middle of a live stream. Oh no, I appreciate you. I thought something was wrong. I'm like, maybe something wrong with the stream. Let me answer this call. No, I'll give you a call back as soon as I get a free minute, brother. Appreciate you. All right, bye-bye. All right, so where were we? All right, so we looking at the largest gainer. So the gainer. I got it. Woo, let me focus. We got to go across all of them, then we'll come back. So on the most recent 21 days, the most recent month, that's what we're looking at. The S&P 500 is up 2.56%. So 2.56%, not 2.6. So we have that right now. So let's go all the way across and we get this down. So energy is down 4.3%, 4.03%. This fly driving me crazy. So let me tell you real quick. I know I'm all over the place, but this fly is in my face. During the summertime, these huge flies get in the house, and it's terrible trying to get them out. Okay, so you might see one make a star appearance a few times throughout the live stream. Just deal with it, please. That's that. So energy is down 4.03% on the month. That's the time frame we're looking at right up here. Materials is up 0.24%. Industrials is up 3.6%. Consumer discretionary is up 1.18%. Consumer staples is down 0.02%. Healthcare is up 4.06%. Financials is up 6.2%. Information technology is up 2.77%. Communication services is up 0.14%. Utilities is up 3.25%. And real estate is down 1.16%. I got excited because I see something else leading in the most recent month that's stronger than information technology. That's why I got excited. So let's put that in first. It looks like the biggest gainer in the most recent 21 days, which is a recent month, is financials. So financials is going to be XLF, and they are up 6.2%. Got it. Now, the next largest gainer, I'm seeing industrials, healthcare. Is healthcare, guys. So it's going to be XLV, and they are up 4.06%. Got it. Now, what's the third one? Industrials. Utilities is right behind industrials, but it's industrials. So industrials is going to be XLI. XLI is going to be 3.6%. Okay, so we got it. So we got our information for the month as far as the gainers. Now we need to look at the biggest losers on the month. And remember, I know this is taking a while, but in the future, this will be done before the live stream start. We working on this format. Okay, so the biggest losers looks like it's energy, but as far as right now, from left to right, it's energy. And then you got real estate. Now, those are easy to find because they're both negative. So we're going to talk about that in a second. So XLE, and that was down 4.03%. And then the biggest loser, number 2 for the month, is real estate. So real estate is going to be XLRE, and they're down 1.16%. Now, here's what's interesting. A loser doesn't necessarily have to be negative. They can be a laggard because out of the 11, they were the third from the bottom. So they're a laggard, not necessarily, they didn't actually end a negative. I hope that makes sense. And then you can have it where it's the opposite, where you have the biggest gainer, but the gainer still finished red, but they're the one that lost the least. So they would be the ones at the top. It would be in ascending order from the top. Okay. Hope you got that. Now, so we're looking for a positive number, but the smallest positive number. So it looks like, as far as right now, what I'm seeing is consumer staples. Yep. Consumer staples. So that one is going to be, is it XLP? Yeah, okay, XLP, and that would be down, not down, that would be 0.02. They put in 2%, so 0.02. There we go. I'm trying everything in my power not to try to hit this fly and smack my mic and knock my equipment down. This fly keep going right in my face like it's trying to go in my mouth. What's up? What's up, Prof? Appreciate you. Hey, man, listen, I'm so glad you sent that comment Let me pull this up on the screen. So this is my bro. He just gave me that call. Take this down. Pull this up. Chat. Tapping in. Appreciate you, man. Appreciate you. Let me take this down. I didn't even have to write disclaimer up. Appreciate you. Looking forward to catching up with you, man. I seen you posting like crazy on Facebook and on all the social media forms with your movement, man. Proud of you. So yeah, man. Take that down. Put this back. Q&A. All right. So when I tried to test the Facebook message, it wouldn't work. But that's good news to see that when somebody else does it, it actually comes through. So I'm glad he sent that message because that shows me that that's working because I was concerned about that. All right, so let's go to 3 month. Right, so we got our data for the week, the most recent month. Now we need to look for 3 month. And the cool thing is this uses the same study, so it should be set already. But we just need to go into the study and change it. So let's go in here. And there it is. Round set was set to 1. We changed it to 2. Click OK, hit apply, and now we have our 2 decimal spaces. You see, as you work it out, it gets faster, but you got to work on it. So now we're looking at the 3 month time frame. But then you want to know how many days those are, just in case you don't remember. So we go to edit sources, and my notes are right here at the top. So 3 months worth of time is going to be the most recent 63 days. That's what we're looking at right there. Okay. So now that we got that, let's go ahead and get this data and put it in our workbook, our spreadsheet. So the most recent 3 months, the SPY is up 11, not SPY. The S&P 500 is up 11%. So SPX is up 11%. There we go. Now, biggest gainer, we'll get to that. Let's go across. So the most recent 3 months, energy is down 3.92%. Materials is down 1.51%. Industrials is up 5.65%. Consumer discretionary is up 3.99%. Consumer staples is up 0.8%. Healthcare is up 7.71%. Financials are up 8.53%. Information technology is up 30.77%. Communication services is down 2.3%. Utilities is down 3.69%. And real estate is up 4.03%. All right, so now that we've seen that, we're going to go through this and put our biggest gainers in first. So, and I'm seeing industrial, so we need to see something bigger than that. Higher than 6.6. So I'm seeing healthcare. Of course, it's information technology. So information technology is XLK. And then they were up 30.77%. Now I believe right behind that, my nose is sweating. Oh my gosh, it's so hot. Right behind that, I'm seeing healthcare. Nope, financials. Yep, so financials. So that's going to be XLF. And they're up 8.53%. And behind that, we're seeing healthcare. Yes. So healthcare is going to be XLV. It's coming back to me, guys. 7.71%. And we're good there. So now we're looking for the 3 months biggest gainer. Biggest loser. Oh, biggest loser. Okay. Okay. Energy. No. So we need to see a bigger loser than energy. There isn't a bigger loser than energy. Energy is the biggest loser. So let's put that in. Energy, XLE, and they are down 3.92%. Got it. The next one is utilities. Yes, so utilities is going to be XLU, and they're down 3.69%. Now, the one right behind that, I believe, is communication services. Communication services, yep. Okay, so they're down, so XLC, and they're down 2.3%. Got it. All right, guys, so we got our data for that. Now we're going to work on the 6 month time frame. So same thing. We go over to the next part of the grid. Right over here, we see 6 months. Show you how many days that is, just as a reminder. Those are. Go here to edit sources. So 6 months is going to look at the most recent 126 days. Okay. We don't have our 2 decimal spaces, so we go back up here to the studies, go to settings, change the rounding set to 2, click OK, apply, and we have it. There we go. Getting better. Put it back on the screen. And every time I say that, I start messing up. So I'm gonna stop saying we getting better. So here we go. 6 month time frame. This S&P 500 is up 9.46%. So SPX, cancel. SPX, slow it down, is up 9.46%. Got it. Now let's read all of them and then we'll put it in order. Oh my gosh. In 6 months, energy is up 22.05%. Materials is up 9.02%. Industrials is up 14.44%. Consumer discretionary is down 3.03%. Consumer staples is up 9.79%. Healthcare is up 0.74%. Financials is up 0.18%. Information technology is up 26.79%. Communication services is down 4.65%. Utilities is up 8.45%, and real estate is up 10.74%. Now that we have those extra 2 decimal spaces, you probably understand why I was rounding it down to 1. It sounds so much cleaner. The only problem is when we have it clean like that, it's hard to know when they're different when they start rounding the numbers, which is what I explained at the beginning. So we're going to figure out what works best. We probably will leave it, and then if it looks like they're the same, then we'll go in and change it, and then it'll turn it into 2 when we need to see 2. That way we can do our best to keep it clean. I think that probably will work better. But let's go ahead and put the top gainers in. So I think it's information technology. So let's go with that one. Energy is 22. Information technology. Yeah, I just wanted to double check. So it's XLK. And they were up 26.79%. Yes. And then we have energy. So that's XLE. And they're up 22.05%. And now we're looking for the third one. So I see industrials. Yeah, it's industrials, guys. So that's XLI. And that's 14.44%. So those are our biggest gainers on the 6 months. So our biggest losers, consumer discretionary, communication services, is communication services. So that's going to be XLC, and they're down 4.65% in the most recent 6 months. The next one is going to be consumer discretionary. So that's XLY, I believe. Yeah, boy, I'm getting there. All right. So they're down 3.03%. Now, here's another one of those situations where the biggest loser, one of them is actually going to finish positive, because I didn't see more than 3 negatives. Yeah, I didn't see more than 3. So we're looking for the smallest gain. So I'm seeing financials. Yes, financials are the ones with the smallest gain. Now, this is going to be interesting. So XLF, and they had a positive gain of 0.18%. Okay. Now that we have all this data in, guys, and like I said, I'm going to work on having this ready before we do the live stream, so this part of the show won't take that long. But trust me, it's going to be worth it when you understand how this tool works. So the idea is we want to get an early indication on where money is going before all of it gets there. We don't want to try to find out where the money is going in hindsight. So based on us putting this information in, from what I'm seeing and what I remember what we put in, what stood out to me was financials, but I'm gonna show you how we use the tool. The first thing we want to do is isolate the in particular industries. So over here where it says highlight, we can focus on one industry at a time. So let's go to just focus on, and I know it's not the industry, but we can also isolate the S&P 500 index. So we select that, and now it only highlights that for us. So this is the most recent week, this is the most recent month, this is the most recent 3 months, this is the most recent 6 months. But if one of these were negative, it doesn't jump out at us, because even if it was negative, it's going to still show up yellow. We don't want that. So over here, we're going to change this to both. So what's going to happen is that if it's negative, it's going to turn red. If it's positive, it's going to turn green. So this means that the S&P 500 over time is just going up. In the most recent 6 months, it's up 9.46%. Most recent 3 months is up 11%. Most recent month is up 2.56%. And the most recent week is up 1.23%. We can quickly see that. Okay. Now, let's focus on a specific sector. So we're looking at communication services. So it only showed up 3 times out of the 4 time frames we were looking at. And most of the time it showed up as a loser. This week, it showed up as a gainer, and it was in the 3rd spot. Okay. So now let's go to a different one. Let's go to consumer discretionary. It only showed up once. So what is this telling us about those first 2 industries we looked at, or sectors? What did that tell us about those first 2 sectors we looked at? That money isn't heavily moving in or out. If it was heavily moving in or out, it would show up more. It would show up more. And it's not showing up a lot. This one more so proves what I'm saying. It didn't show up as the top 3 multiple times. It only did it once. And when it did show up, it showed up as losing. So that would be something that would catch my attention if it showed up more than once. You'll see when it come up for you to see what I'm talking about. So let's go to energy. Okay. Now here's what's jumping out at me. You see how energy has this high percentage gain in 6 months, but now in 3 months, it's starting to drop. Then when you get to 1 month, it's starting to drop. Then when you get to 1 week, it had a little gain. So money is moving in energy, not just in, but out. Like there's activity in energy. Why? It showed up 4 times. Every time it's either one of the biggest gainers or one of the biggest losers. So it's telling me that money is active over in energy, if that makes sense. Now, when we go to financials, now what's catching my attention with this one is that with the financials, it's green, even as a loser. So in 6 months, it's one of the losers, but it's a small gain. Then when we look at 3 months, it's not even a loser, it's a gainer, and it's number 2, and it's up 8.53%. Then when we get to 1 month, it's the number 1 gainer, it's up 6.2%. Do you see where I'm going with it now? It showed when money was small over a 6 time frame as far as gaining in financials. Then in the most recent 3 months, it's up 8.53%. In the most recent month, it's up 6.2%, which means most of this 8.53% is in this month. And then it didn't show up as a loser this week. It just was a small gain this week. Now let's verify that. So here's the most recent week. See, financials was only up 0.16%. So it wasn't that it was losing, like it didn't end up negative, but it wasn't the biggest loser or the biggest gainer. So we couldn't see it within the week, but it still ended on a up this week. All right. So let's move on and see what we got in the next sector. We got healthcare. So when we go to healthcare, it's kind of active. In the most recent 3 months, it was the third largest gainer. Then in the most recent month, it's the number 2 largest gainer. And then this week, it's the second biggest loser. It took back 1.77% compared to what is given in the most recent 3 months, which is being up 7.71%. Now, information technology is going to be interesting once we get to it. So here's an industrials. So in the most recent 6 months, industrials is up 14.44%. In the most recent month, it's only up 3.6%. So it looked like it was having more activity on the upside over 3 months ago, because it didn't even show up in the 3-month time frame as far as the biggest gainer or biggest loser. Now, that doesn't necessarily mean it was negative. And then you had this large information technology there. But I like to narrow it down and focus on the 3 extremes, the 3 top and the 3 bottom. So we go to information technology. All right. So what we're seeing here, we got information showing up in the top. Something happened here. It didn't show up as the biggest loser in the most recent month. But it's showing up in the top every time it does. This week, it was number 2, but energy was number 1. Then we go to materials. Materials only showed up, so that wouldn't even be something I would look at because it's not even showing up. Real estate. You see how those don't even show up. So that's not, to me, that's showing that's not a sector I would be interested in if I'm looking for activity. I want to see it pop up more often. And then if it pop up, is it popping up big or is it popping up small? Information technology is popping up more than once and it's popping up big. Financials is popping up more than once. And it looked like it's going from a little bit to more. What's the other one that stood out to me when we looked at this? Energy. Yep. So you're seeing activity with energy. So yeah, that's how the tool shows you things that you might miss with the moving averages. But like I said, I'll do a video to break this down to show how much value this tool can provide with getting clarity on where there's activity, where money is moving in, where money is moving out. I need a whole video to break that down. That way, when you watch the video and then we use the tool, you'll know how it all comes together. So we'll do it that way. Let's move on in the show. Let's go here. We can take the Q&A thing down. I didn't even put up the thing for the tool we was using, but we got through it. We got through it. So we followed the money. We did that. Let's go here. Time to follow the money. Want to see where the money is going. All right. Notable news. Now, this is interesting. This is interesting. Take that down. So the notable news, U.S. and Iran ceasefire is canceled. It then popped off again over there. They tripping. Okay. So I'm gonna read this and get professional about it, but they tripping. All right. Now, we know that it has something to do with oil, but how does that affect our economy? How does that affect us at the pump? Like, we notice it at the pump, like gas prices getting higher and things like that. But we want to try to understand this on a macroeconomic level. And I'm explaining all this as we go through it. So let me just read what I got. The Strait of Hormuz, and I hope I'm pronouncing that right, Hormuz, H-O-R-M-U-Z, is an issue again, potentially threatened to stop or delay up to 20% of oil supply. The world's oil supply is going to disrupt or delay up to 20% of the world's oil supply, which is a global critical resource. This puts a strain on the global economy, causing countries to purchase oil from other regions. Some of those places are Africa, South America, and the United States. Causing events to put a strain on any economy can be a form of economic warfare. This game being played on the Strait of Hormuz makes it where the cost of oil goes up everywhere for everybody. Okay, it just don't hurt us at the pump. It hurt everybody. Oil is almost in everything. So just follow me with where I'm going. Logistics depend heavily on oil. That cost gets passed down to the consumers and customers. This is shipping, guys. That's all this is. It's a fancy word for transportation of goods, shipping. Okay. This is going to be your industrials sector, specifically in the following industries: air freight and logistics, ground transportation, and passenger airlines. I do believe, and I should have put that one in there too. So matter of fact, I'm going to do a little research during this live stream right now, but I believe it also affects something that we do not think about. So add chapter before, which is the cruise lines. The cruise lines. So let me do this research real quick. We got that there. So go ahead and ask me that. Let me double check and make sure. Let me see if I'm gonna get the answer I'm looking for. Okay, so no. Okay, so it's specifically going to be in the industrial sector, so we don't have to worry about it showing up anywhere else. That's good to know. All right, so let's finish giving you a visual of what I'm talking about. So let's go back to the charts, put this here. I got the Q&A up. So industrials. So we're going to change this to pro market closed. Bam, we got that. Now we're going to go up here to market watch. I have the heat map pulled up for the S&P 500 index. The logistics is going to be inside of the industrial sector. So let's go find that. Take me off the screen. And here we go. Industrials, this section right here. Now, once we go inside industrials, we're looking for a specific industry in here. One of them is going to be air freight and logistics. So it's this one right here. Here are all your companies that deal with that. And notice right now they're green. But this is air freight and logistics. This is one of the industries that would be affected. So we back out of this. We go back to overall industries and ground transportation. That's what we're looking for now. Right up here. So here's ground transportation. UNP, CSX, Uber, JB Hunt. These are companies that's going to be affected by that. And then you got passenger airlines. So we back out of this. Passenger airlines is down here. All of those are red. And most of these have earnings coming up. And I believe we covered Delta Airlines on Friday. So we just covered them. And then United Airlines, if I'm not mistaken, they have earnings coming up on in next week, but we're covering them Monday before their earnings. So let's pull this up. UAL, there's a couple ways to do this. Let's pull up the calendar because that's what I was sharing with you guys last week. So we just go to the calendar and we go to the calendar, we have the earnings pulled up. We need to make sure that we don't have this just set to one company. You see up there in the symbol box, we delete that, click enter. Well, no, go to settings, and then we want to pick the S&P 500 index. Or I know what company I want to look up. I'm all over the place. Just put in UAL. There it is. So it narrowed it down. We don't have to look through that long list. When I click on it, we get the information right there. So United Airlines, estimate date 7/15. So that's going to be Wednesday. So they have earnings coming up on Wednesday. We can also go to the charts and see this. So right click, send to the charts, go over to the charts, go to the daily time frame, zoom in, we can see it right here. Click on that. That's the earnings. So yep, July 15th, after market. That's when they're going to announce it. But we're covering it. Let me pull this up. Go here. Let's go here. I want to pull this up so you can see it. Go to YouTube. Bam. YouTube. Go there. All right. Yeah, we're covering them on Monday. So let me pull this up so you can see it. We're covering United Airlines on Monday, but their earnings are actually being released on the 15th. And it's a lot of different companies coming up. So some of them we're going to be able to cover before, and some we're going to cover the day of, and some after. But it's a lot of different stuff coming up right now. And if you want to know what those different earnings are that's coming up of companies that's in the S&P 500 index, we can go back to the calendar, and I'll show you real quickly how to do that. So we go here, go back to the calendar. So Market Watch, I already had a calendar selected. Right here, we click this settings and go down to, take me off the screen so you can see it. Public, R through W, go to S&P 500. And now all of those earnings of the companies inside the S&P 500 that's coming up or just happened, you can see them like this. Now that date that you want to make sure you have is not this calendar over here, but this calendar right here. This is what changes the layout you're looking at over here. So here's July 2026, and then you can go through these different days and it'll update the list depending on what day you click. Why is it showing all of that? Oh, it says 42. I was wondering. I just seen one earning bulb there, so I thought it was just one company. But it's saying times 56. So all of them could not fit inside of that box. That's why that list is so long. But this one is just Pepsi. So that's why you just see this one company there. So Pepsi was the only S&P 500 company that had earnings on July 9th. Delta Airlines was the only one that had one on July 10th. But on the 30th, it's 56 companies announcing earnings. So that's why this list is so long. But this is where you can look to find that information. All right. Got it. So where were we? So I wanted to point out those companies that would be directly affected by rising oil prices. So we went to the Market Watch tab, Visualize tab, and the last thing we left off on was passenger airlines, which is good. So let's keep it moving. So these are the companies that provide the services of shipping and transportation in the industrial sector, those three different industries. But all businesses in some capacity, all of them in some capacity, in some way, and some more than others, depend on these services. So when they have to spend more money on them, it increases the operating costs and reduces their profit margins. I'm gonna say that again, just in case that was confusing. Those businesses that we looked in or looked at inside the industrial sectors, specifically in those industries, and those three industries again were air freight and logistics, ground transportation, and passenger airlines. Other businesses depend on services that those businesses provide. And when they have to pay for those services from those businesses, then they have to charge more of whatever they do to account for those costs. Okay, it reduces the amount of money they're able to make because they have to spend more, so they end up with less profit. So I'm gonna read what I said, and I hope that add more clarity to what I was saying. So when they have to spend more on those companies because they raise their prices because of oil being more expensive for them, it increases the operating costs and reduces their profit margins, because every business doesn't have the ability to instantly raise their prices to cover these costs. Every business doesn't have the ability to do that. They have to work to increase prices in over time. They don't just change it every time gas prices go up or oil cost goes up. So this doesn't just affect us at the pumps when we're buying gas directly. The other businesses we spend money with or invest in are spending money on gas and oil as well. This is why this would be called a macroeconomic event, because it has a widespread impact, specifically on a global scale. Okay, that's why it's such a big deal when they pay attention to the price of oil per barrel and things like that, because it's such a critical resource that a lot of businesses depend on to factor in with their costs. Think about it. Airlines, they got to fuel the planes. So if the price of gas go up, this means their profit margin for what they charge for tickets are going to shrink down. They're going to make less money, or they're going to have to raise their prices. So it's a balance, guys. It's like a balancing act, okay? So SpaceX, let's go to the charts. Now, I did a whole video going into deeper detail about the SpaceX. It's a great video, if I say so myself. SPCX. You can't see this. Put it up on the screen. So I just typed that in the symbol box over here. And guys, I was warning about this because this isn't anything new. Okay, so we're gonna come back to the charts. I just want to look you in your eye when I tell you this. A new fool is born every day. So what I mean by that is some people don't understand why old tricks work. Old tricks work because they're always new to somebody. I'm gonna say that again. And my nose itch. Give me 1 second. Oh my gosh. A new fool is born every day. This is no disrespect to nobody, but it's true. A new fool is born a new fool is born every day. There's always something new to somebody who didn't know about it before or never experienced it before. That's why certain businesses and companies and institutions are able to get away with the same old tricks, because they're new to somebody who hasn't experienced it before. And then even if you have experienced it before, they start hitting you with, it's going to be different this time. Oh, it's not going to do that. It's not. It's going to be different. We're going to do this, or no, this is like, listen, guys, that's why I focus on probability, statistics, and mechanics. If you know how something works, then you can expect it to play out a certain way because you know how it works. Please do yourself a favor and watch that video that I did on SpaceX. Matter of fact, I'm gonna go ahead and put it in the chat right now. I also have it in the description of the video. So you can find it in the description of the video, but I'm gonna also go ahead and take my time to put it in the chat. So let me put me on the screen, and I'm gonna do the work of going ahead and finding this video and putting it in the chat for you guys, because I need to put it in the chat on X, because I don't think this is going to do it for me. We'll see. It might let me put it on there from here. I'm going to try. Yeah, it won't let me. I'm going to have to manually do it for X. I can do it for Facebook from here. So just bear with me, guys. Let me get this link and put this video in here for you. So open this up. That's not it. That's not it. That's not it. That's not the way to do it. Okay, content. Let's get this video, go to edit. So here's the title. Got it. So take that and start putting it in the chat. So go here, paste, space, get the link, copy, put that there, paste, all, copy. Okay. I just put it in the link. Just put it in the chat. And for some strange reason, now that was my first time doing this from Social Stream Ninja. And it's showing like it only sent it to X. So I'm gonna see how this played out. So we go there. I'm doing this from Social Stream. Pause it. Go inside. Well, that worked. It did go to X, but I don't know if it went to Facebook and YouTube. So let me check to see how it played out over there, because I wanted it to send it to all of them. I didn't want it to just send it to X. Let me see if I type that. Custom message destination. If none set, it goes to all. Okay, guys, let's see if this works. Let's see if this works. I actually had to go in there and select where I wanted to send it at. So I'm still learning how to use this. Let's see what we got. It says sending to selected points and endpoints only. Now I'm gonna take the one off for X because we already sent it over there. So I'm gonna take that one off and then see what happens. So we go to Ninja, go to chat, and then send it. I just sent it. It seemed like nothing happened when I did it that way. I'm gonna try it one more time. Paste. Nope. So let me go to studio, content, live, go up here. There we go, live. Nah, it didn't come through. I don't see nothing over there from there. So let's go to chat from here. It's on Facebook. It just didn't go to YouTube. It went to Facebook multiple times. Just didn't go to YouTube. This is so weird. So let's try this. There you go. So it worked doing it through Restream, but it wouldn't work doing it through Social Stream Ninja, and it came through. So if somebody did message me on YouTube, I would get it. Great, good. All right, so we got that. Thank you guys so much for tuning in. Please hit that like button and consider subscribing to the channel. It would help me out a lot. I'm telling you it would. All right, so let's go here. Let's pin this to the top. So like I said, this is where I went into deeper detail about not just SpaceX, but how IPOs work. How IPOs work, why companies IPO, who makes money off of it, the things they put in place, and all that other good stuff. Very informative video. Do yourself a favor and check that out. All right, so I wanted to talk about what we see on the charts to back up what I'm saying. So we go here. Let's go to the charts. Take me off the screen. So here, now we have a 1 year daily chart pulled up of SpaceX. You point all that out to you. And actually, it's trading for less than it closed on Friday right now. So here is SpaceX 1 year daily chart. That's our information right here. Now, here's where it's trading at right now. You see the bid and the ask. It's below $143. It looks like it closed at $145 five. It don't look like it did close. It closed at $145.30 right here on Friday. On Friday, it had a 52-week low. Now the company ain't been out 52 weeks yet, but that's the time frame and language that they use. 52-week low of $145.07. So let's go ahead and delete some of this stuff. So here's the 52-week low. Here's the 52-week high. Now, this price level over here, it is $229.85. SpaceX is actually traded that high, but it was in extended hours. So you wouldn't be able to see it on a regular time frame like a daily chart or a weekly chart, okay? So that's why I put that number there. So you'll be able to see it. Now, here, we cut on the floating data box. SpaceX hit the open market on June 12th for $150. Okay, so here's what we do. We open up, use this tool. Let's take the floating data box off. We don't need that right now. So take that off. I'm going to use this price level tool. Here's where they opened at. So they literally opened at $150 when they hit the open market. It dropped down a little bit. So I'm going to show you where that price level is. Come on. Let's do this again. Put this here. Then go here. Go here. Floating data box. When I mouse over this candle, it's going to tell you what the low was. So the low was $149.34. That's as low as it came out. That was as low as it was on that day that it IPO'd to the public. That's the lowest it was. $149.34. 149.34. 149.34. That was the low. So let me do this. Go here. Why is it doing that? Take this floating data box off. We don't need that now. I want to move that. I thought you'd be able to do that with this. No, you can't because it's trying to do the other stuff. Oh my. It deleted everything. I'm gonna leave that alone. I should have dragged it when I had the opportunity the first time. Anyway, that's the low. That's the lowest it was on the day that the IPO. It opened for $150. My point is to get to it. Everybody who purchased SpaceX as a long position, meaning they expected the stock price to go up. If they purchased it at any price above this since the IPO, they're losing money. And right now it's trading below $144. If you watch the video that I shared in the chat that I have in the description, I go into deeper detail about breaking down why. I actually explain why this happens more frequently than it doesn't happen. And once you watch that video, I'm highly confident that you'll understand why. Okay, so that's that part with SpaceX. I don't really see it personally getting back above this. Erase a lot of this stuff. This 9-day simple moving average, because you don't have a 200-day simple moving average because it ain't even been out that long. It ain't been out over 200 days to even start plotting that line. But I would be shocked personally if anytime soon it gets above this red candle right here. So what price level would that be? No, we don't need that tool. We need the price level tool. So we go to the price level tool. I would be shocked if it ever get back above $159.05 anytime soon. I would be shocked. I would be shocked. But yeah, I got that video in there. All right, so what else did I want to cover tonight? Oh, okay, so here's what I've had a few people ask me about that's concerned about having to sit in front of the computer all day. So you have different styles of retail participants. That's the word I want to use, because different styles are catered to certain time frames. Like a day trader is looking to get in a position and out of a position in that same day, in that same trading session. They're in and out. A swing trader is longer than a day, so they hold a position overnight, but they don't hold a position for longer than a year. And then you have an investor. An investor is someone who holds a position for longer than a year. That's how I view it. So those are the three time frames. So depending on what time frame you're attempting to participate in the market, it would depend on your style. Day trader, swing trader, and investor. And someone can do all three, but doing it a certain way would depend on the style that you're going after or the style that you participate in the market with. So because of that, it's people that have other things going on in their life and they don't want to sit in front of a computer all day. So since they don't want to sit in front of a computer all day, they want the flexibility to be able to participate in the market without having to, like I said, sit in front of the computer all day. So here's some of the ways you can do that. One of the ways you can do it is to create an alert. And that's what I wanted to talk to you guys about before we finish the show tonight. We didn't do the fear index. We did the fear and greed. I got ahead of myself. So here we go. Let's do the fear index. So here's the VIX, VIX. Take this other stuff off the screen. So if you don't know what the VIX is, the VIX has a nickname, the fear index. So what it is the CBOE market volatility index. So I have talked about this word volatility before. I'll do my best to explain it briefly again. So volatility is basically a quick movement. A quick movement. It could be up, it could be down, it could be a spike, it could be a dip. But most of the time, they tend to use volatility more frequently when there's a decline, when there's a dip, when there's a pullback in leaders, or when there's a lot of activity to the downside, they're more likely to use the word volatility. But it also means volatile when a stock goes up quickly. But most of the time, they're more likely to use volatility with the down movement. So what the VIX does is when there's fear in the market, there's selling that takes place. There's more selling when fear takes place than it is buying. When that fear comes in and the selling comes in, it comes in a lot. And then there's certain things that happen in the market, like people start buying more puts. And if you don't know what that is, that's like it's an option to where if you buy a put, it can prevent you from losing more than what you would lose. Oh, how can I say this? You profit on the way down. That's a simple way of putting it instead of overcomplicating it. It's a way for you to participate in the market where you profit if the stock price goes down or the underlying goes down if you own a put. So if the activity of put buying increases, this means that a lot of people think the stock prices are going down. That means the overall sentiment is bearish. So one way to know that is if you see, or the market sees, a lot of selling and an increase in put buying. So they use this fear volatility index to determine, is there fear or greed in the market, but more so fear. So here's what I want to point out to you. Let's do that. You see this spike right here? And we're not even going to focus on that one. Just let's say this one, this spike. So that spike, the VIX popped up, fear and greed index. Got it. So they do call it both. This my guy. Hold on, let me pull my chat up. Appreciate that he's here. Appreciate it. So let me take this down. Q&A. Bam. Chat. That's not the right chat. Let me switch it. It's not more so fear, is both. Okay. So this is Comment from NLMJ, frequent watcher. He helps me out from time to time. So he's saying that it's not more so fear, is both when it comes to, and good evening. Hey, Sanite Bella. Hey, listen, I'm glad that y'all are here. I appreciate both of y'all for tuning in. Appreciate both of you. Got you. So you saying that it's both. Got you. So yes, people call it both. So I'll say it from my personal opinion then. I respect it more when I just see it as it's spiking. So that's the fear part. If it's coming down, they do call it the fear and greed index. Totally agree with you. But it seems to me when it spikes, people are way more fearful than they are when it comes down to be motivated to be greedy. Can we at least agree on that? Like it seems like people are not afraid the more the stock price, the VIX comes down. But it doesn't seem like to me personally that when it comes down, that means people are just greedily buying. They're just not as afraid if the VIX is spiked. That's how I interpret it. But they do call it the fear and greed index. But to me, it seems like people respond to it way more when it's spiked than they do when it's coming down. What's your input on that? What's your feedback on that? And thank you guys for tuning in and commenting. I'm glad that you guys are here. So yeah, let's look at this spike right here. So we got a spike at $23.34. So when we go over to the SPY, so what date is that? So that's June 9th. Right, June 9th. So now when we go over to the SPY, SPY, and we look at June 9th, it's a gauge to help measure how you are going to participate in the market. Got it. And I'm gonna pull that comment up. Thank you. Got you. So based on what you're saying, if the VIX is spiking, then that would make you bearish because the overall market sentiment is saying that people are more inclined to be selling because the fear is high. But if the VIX is low, then you can be bullish because people are calm and they're more, they believe in the strength. They believe the market is strong. The market isn't weak. It's not selling off. They believe it's a buying market. It's bullish when the VIX is low. That's what I'm getting from what you're saying. And let's put the, exactly. Got it. We on the same page. Cool. All right, cool. We got it. All right. So we was talking about that date, June 6th, not June 6th, June 9th. So now when we zoom in, we're looking at the SPY. I know it's not actually the S&P 500, but it's tracking it. So right here, this is that date, June 9th. We got that same date on the SPY right here. Look how long this wick is. This range on this candle is very wide. So let's pull up the floating data box. So notice when the VIX spiked, here we go. Sanite Bella. Let me pull your comment up. Inverse correlation with the SPY and VIX. VIX has a good support at it around $12 to $15. Fear comes in when VIX is over 17%. Well, not 17%, $17. Thank you. Thank you so much. Because what I was looking at, I knew that it had a specific number. Correct. Gotcha. Thank you guys so much. So yeah. So when we look at the VIX, let's peek back at that for a second. So we peek at the VIX. I was looking at this. I was looking at the 200-day simple moving average as a baseline. But thank you for pointing out that it's a specific number that they go by. So that specific number, put that in my notes. It's $17. $17. So when it gets over 17, the market is basically running hot. It's starting to become fearful. So when it reaches that price level and starts creeping above, this gives the market participants and the people that's watching the VIX the idea, hey, I might want to trim some of my positions, or I might want to start thinking of a defensive approach, or if I'm going to open a position, I might start looking at taking bearish positions because the market is becoming more fearful. That's what I'm getting. So let's pull the Q&A thing back up. There we go. Take that down. So yeah, we was looking at hedge, right? Hedge your positions. Hedge your positions. Now, when it comes to hedging, now I'm not a tax advisor, so I need to make sure I put that disclaimer out here. So here's my thing with the hedging. I'm learning that there's different tax consequences and different things that happen when you combine in stocks with options on the same underlying. So please be aware of that and talk to a licensed tax professional about how hedging in the same instrument can affect you when you combine stocks with options. Okay? Please be aware of that. But hedge is the right term. Absolutely. Thank you so much for that. So let's go with that. Okay. So we pointed out these dates. Let me write these down. So one of the dates was June 9th, that spike right here, right? June 9th. And the other spike of the volatility was the crazy one. Let's go back to the SPY. It's a specific one I wanted to see. So we go back to the SPY. Washout rule. Yep, that's one of them. Yep, that's it. Wash out. And then there's something else that I had seen where the clock resets. Now, remember, I'm not a tax advisor, so don't just go by what I'm saying. I'm not a licensed tax advisor. You need to look this up. I'm just sharing with you educational stuff that I've learned or that I'm studying. So let me pull your comment up, the wash rule. And you can layer the VIX on top of the SPY. Got you. I have seen people do that. I don't remember how to do it, but I'm gonna have to research it to look it up. Okay. So that way you can see the diversion. You can see when both of it happen. I have the VIX down here as a label at the bottom. So let me show you that. Take the floating data box off right quick. We moving kind of fast. We all over the place, but I'm glad you guys are here. I'm so glad you're here. So right down here on these labels. So something's missing right here. I don't see the VIX price here. I see some of the data of the VIX because I see VIX R. So I see the low and the high, simple moving average, previous. Here it is, VIX. Let me take me off the screen and take this comment down real quick. So here's that. So right here, right where it says VIX, $15.03. So let's go over here and see if that's where it's at. VIX. Yeah, you see? So it's on my chart as labels. It's down at the bottom. So if we go back to the SPY, but I know what you're talking about. Like it's another way to just layer everything over one another where they all showing up. Now when we zoom in, so those are the dates I wanted to look at to compare the two. So the volatility right here on this candle. So that's going to be the June 9th I was talking about. This wide range, that's high volatility on that candle. Cancel, floating data box. So it's a wide range on that candle as well. There's $24.31. And then when we go peek at the VIX for that same date, we see that the VIX had spiked. Then we see a candle with a similar formation right here. And then with it being where the open closed, I think it was just pennies off. So the open and the close. So you got $728.99 on the close and $728.95 on the open. So it's only 4 cents off, but it was highly volatile because of the range between the high and the low on that candle. So the date there is 6/26. So 6/26. So now when we go over to the VIX, cut this floating data box off again and go over to the VIX, VIX. We're looking for that date again. 626. Bam. It doesn't look like it's such a big spike like over here, but it did peak higher than the 3 previous trading days during that time frame. And it hit a high of $20.72, which is definitely above the 17. So yeah, that's what I got for the VIX. So fear and greed index, it helps determine whether participants, retail traders, or however you're going about positioning yourself in the market, whether you should start hedging, whether you should be bullish, whether you should be bearish, whether there's fear in the market, and whether there's greed in the market. So there's a way for you to measure that by using the VIX. So we got that. And thank you guys so much for your input with this and helping me with this. So let's go ahead and go to where we wanted to go now. The creating alerts. So we was talking about, I had moved a little fast. I wanted to get to the part about people not wanting to sit in front of the computer all day. So they want to be able to move around, sit in front of the computer maybe like an hour and set themselves up for whatever they want to do and not have to babysit a stock or a position. So one of the ways you can do this is, let's pull up a random company, APL. Let's pull up Apple. So we pull up Apple, and I'm gonna pull it over on the charts for you guys to see. So go there. So we got Apple pulled up. Now, what someone can do is they can just set up an alert. So they do their technical analysis. So let's say down here, this price level, $260.10. I want to know when Apple comes to that price level. So if you're using the Thinkorswim platform, one of the ways you can do this is right click on that price level, and right here where it says create alert withdrawing, you select that and it's going to activate that price level. So that price level won't go away if the alert is triggered. That price level is going to stay there, but you can use it as a dual function. So right here is where you can change it. Crosses below, crosses above, or even crosses in either direction. And then let's say you have more than one alert, but you don't remember what you want to do. When you first put that alert in, you can say exactly what you want to do in the note. So let's say, for example, buy 100 shares Apple, or just buy 100 shares, because it's already going to tell you that that alert is associated with Apple. So you already know, buy 100 shares. That's what you wanted to know. That's what you wanted to do. So down here, it's going to ask you these different options. How do you want to receive it? When you want to receive it. So notify you with a sound, SMS, text message on your mobile. I believe you can have it where it's an email, but I know you can get it as a text message. So let's think about it as far as like a text message, because people want to be on the go and be flexible about it. So that's one way you can go about it. And you can have it where it actually expires. There's a scroll down here, guys. So you can have it cancel itself if it doesn't activate within a window of opportunity that you think that it should happen in. My watch is going off. Let me cut this off. Okay. And then you can click this box to say show alert book after I press create, just to confirm that whatever you chose or selected would be there. So you click create, and then you see it. It's right there. So drawing, so it tells you the source, the context, so Apple, and all of the trigger data you put there. Okay, so there's multiple ways to do that. We've already been in the show for over an hour. Thank you guys so much for tuning in. I'm going to go into deeper detail with this because there's a lot of different ways to do these alerts. And when I was doing the research before I did the live stream, there's a lot of sensitive information that shows during the setup process. So I'm going to have to do a video where I can edit and blur and remove certain things, but you'll get the idea of where to go and how to do it. And we'll just do a specific video on doing that. Okay. So let me go here so we can get ready to wrap up. So closing, here we go, here we go. Like take the Q&A down, go here, education program. Yep. So you already know. I hope that you learned something and I hope that you earned something. Thank you guys for tuning in and joining me tonight. This Sunday, July 19th at 9 p.m. Eastern Time, we're reviewing this week's performance of the 11 sectors in the S&P 500 index. Notable market news, learning how to use Thinkorswim's platform, and performing a live Q&A so we can focus on building our community. And make sure you guys keep tuning in weekdays following a market trading session at 11 p.m. Eastern Time. Take care and God bless.